Hello traders, it's Samurai Trader here. Welcome to this training session. Target 300 a day per contract, the Master Trader program. So in today's program I'm going to be recapping a number of trades, but most importantly in today's session we're going to be focusing on how to trade divergence. Very important. Even though I might be looking at the futures markets, we'll look at some trades on gold, ES, CL, and maybe the NQ. We'll just see how we go for time. Please remember these setups are applicable to all markets, whether you trade futures, Forex, or stocks. It really doesn't matter. So as we get underway, you've probably heard this statement before. The definition of insanity is doing the same thing over and over and expecting different results. And the reason I bring this up is one of the greatest challenges I tend to find for traders is actually trading divergence. And if I look at traders that have been struggling over the years, and remembering I've been doing this now for 25 plus years and I've dealt with thousands of traders, and when I sit down and analyze a trader's poor performance, usually a very high percentage of the time it comes down to divergence trading. So I really want to raise some red flags here and just give you some warnings early. So the first one is the person who catches two rabbits catches none, meaning if you are divergence trading and trend trading, it can be very difficult because quite often you can enter a divergence trade only to see the market take off as a trend continuation trade, and you miss that trend continuation because you're in a divergence trade. So I'm going to be showing you and giving you some great ideas on how to trade divergence, but I really want to be waving that flag and give this recommendation. Please do not consider trading divergence trades until you're consistently profitable as a trend trader, but you also want to learn how to trade divergence. You want to or even more importantly, learn how to recognize divergence, because I'm going to show you this on the chart. But when you've got a divergence trade setting up, you want to be very wary in taking any further trend continuation trades, but I'll show you that on the charts. And another thing here is tops and bottoms are so attractive because they look good in hindsight. So it's very easy to look back and say this was a divergence trade. So I just really wanted to raise that. But can you make money? Absolutely. However, it's for the more experienced trader. But for the new traders, without repeating myself, you've still got to learn what divergence trading is. So as we go through this session, I want you to have the mindset of what can you learn from this, how can you use it. Just remember, traders, just that one idea may change your trading career. Don't forget to take notes, and if you're not sure on something or I use a term, just simply Google it or YouTube it. And most importantly, for members, remember, if you do Google or YouTube, don't buy anything. Don't keep, and this is really even for the general public, be careful of what I call the shiny object syndrome, that is going from one thing to another. Now very quickly, what I'm covering here, members, for members watching this, remember in the strategy PowerPoints you will find the double divergence here, the T19, the T89. You'll find them the PowerPoints there, and don't forget also under cheat sheets. So the cheat sheets, you will find a number of these strategies here. And just one more thing, remember for new members to continually check for new recordings. I'm uploading new recordings each week, new uploads, ebooks, notes, a whole lot of other things into the members only area under new recordings and uploads. And last of all, just before we move on and get stuck into the content here, with your spreadsheet of there's over now 300 videos here, don't forget to go to the strategy, go to the bottom of the spreadsheet. Okay, so on the bottom you'll see the tabs. Okay, day trading, live trading, webinars. I've done NQCL, Forex. Go and click on those and they will take you, if you just want to look at the master sheet, okay, John's videos and webinars, etc. The tab is at the bottom. So don't forget to go under the strategies. The strategies I'm talking about are either here, there are 30 of them, plus of course the live trades, etc., in the live webinars, or under new recordings. Okay, so don't forget to check that area. Now moving right along here, and this is for my members and for the general public. Traders, don't use notepads or standard notepads. Go and invest in your spiral binders. And members, I know you hear me go on and on about this, but when I do one-on-one coaching, either by Skype or the face-to-face clients I've had, when they come in, I still see them using loose leaf notebooks, and they end up with crap everywhere. Now, I don't know if any of you have I'm a king cook. I love cooking, and I love watching the cooking shows with professional chefs. If you watch how they keep their workspace, it is spotless. Okay, they have one thing they're focused on their workspace. They clean up as they go, right? They keep everything neat and tidy. Likewise, as traders, we've got to consider ourselves as pilots. If you go into a cockpit, it's clean and tidy. Get yourself spiral notebooks, date the pages as I go through, and as you watch my videos and other training sessions, date the page, write down the ideas. If I go too fast on something or you're not sure, play it back. This is what professionals do. My job as your coach is to take you to master trader status. Very, very important that we don't forget the basics. Okay, now as we're about to get into the strategies themselves, understanding the risk, don't forget traders, there is a risk in trading. If you haven't seen my videos, or if you're not a member, or even if you have and you haven't read the disclaimer for some time, please pause the video, read the disclaimer. Very quickly, a 2-second ad. If you haven't got one of my free training manuals, please click on the description link below. I've got The Truth About Day Trading and also my training manual. And of course, make sure that you subscribe to my channel, visit my website. For $197, there is no upsell, there's nothing else to buy, there's no coaching programs, you're not going to have a telemarketer ring you. That's all it is to buy everything, my entire program, my hundreds of videos, PowerPoints, cheat sheets, pardon me, some of the key indicators I use, etc. That's it. All right, that's also the end of the advertisement. So let's get stuck into this. I've got some great info for you. So first of all, with counter trend trading, divergence trading, for members watching this, the T3, the T89, the V trade, and for the general public, they're really spikes where you have a violent move, or a V trade is basically where you get a great big move, then it moves right back. Okay, it's a bit like a slingshot trade, and some people will even call it as a counter trend spike. It's a spike in the market. A T7 is a double top or a double bottom. Your T19 is a standard divergence trade, and then of course you've got your 1Ds and your 2Ds, which is single and double divergence. These are all divergence trading. Then of course we have our 200Bs. Now for our 200Bs, it really is rather than a trend continuation trade, because it's such a deep pullback, that is also a counter trend trade. Okay, so they're the sort of setups, and you'll see those in the PowerPoints and cheat sheets that you really want to learn over time. Now very, very important, and let's not forget this, traders, that every master was once a student. Okay, every professional was started at the bottom. It takes time. You'll pick these up. You only need to focus on 2 or 3 with trend trades, and you'll pick these up over a period of time. Now we're about to go to the charts, but just a couple of key points I wanted to get across here. I'm always asking myself as a trader, do I have divergence? Because yes, I do actively trade divergence, but also it's very, very important to me to be very wary of trend continuation trades when I have a divergence trade setting up. Now likewise, do I have angulation? And I'll show you what that is, and that's also very, very important, because when you see price action angling strongly away on a 45-degree plus angle away from your moving averages, all right, the alarm bell should start to ring that you've either got a spike setting up or a potential pullback. Even if it's only a shallow pullback, you want to be aware of that. Likewise, where I use an anchor chart, exactly the same thing. Do I have divergence and angulation? Not that I actually trade off the anchor chart, but I want to be aware. Now, do I have three hills? I'm going to show you this on the first chart, because when you get three hills or three waves, it's a good indication of a potential retracement. Now, you can have a big retracement or a big pullback after one, but once I start to get three, I'm going to become much more focused on what may be happening on my charts. Do I have other valid chart patterns? For an example, ascending and descending triangles are very important to me. Now, as much as usually they're not, well, they can be, but they're not usually associated with divergence, but they're still very important patterns that I'm looking for. Likewise, a fanning of the EMAs. Now, fanning of your EMAs, I use EMAs. If you're using moving averages, when you start to see, and I use, as you'll see, usually 4 or 5, you'll see them when they're starting to fan apart. That's a really good indication that the market's becoming overextended, and I could possibly have a divergence trade setting up, or even a spike setting up. Very important points. So let's now get straight to the charts. Okay, so what we're looking at here, and for most of these examples, I think for all of this I'm going to be using a Renko, but this is just as applicable whether you're using, and Renko, by the way, is great for me to illustrate. And just remember, whether you're trading, and let me just actually show you this. Have I got it here? Is it on this chart? No, it's not on this chart, it's on another chart. I was just about to show you where I've got Renko, range, and tick set up on the same chart, but Renko makes it very easy, and the patterns are much easier to pick up. So let's start off with, what do I mean by three hills? Okay, so we can see here we're in a clear uptrend. All right, we can see here's 1, here's 2, and here's 3. So this is what I call three hills or three waves. So what I'm starting to think here is the market becoming overextended. The probability of a retracement or a good divergence trade is building, because what you can see is this, and let me just make sure. Okay, I've got that. Let me just show you this here, because what I'm starting to get, and this is what I mean by angulation. Notice that wedge between my EMAs. Notice how it's starting, they're fanning apart. The EMAs are fanning apart. I'm getting angulation, right? I'm getting an angle away from the EMAs. This is a really good signal to me that I've got potential. Whoops, let me just close it. Sorry, I'm just get this right. Oh no, I can stay there for now. That I've got a potential divergence setting up. Then what I'm starting to see I've got a customized MACD that I'm starting to get divergence setting up here. Now I'm also looking over at my anchor chart, and I won't go into the anchor chart today. We'll focus on our entry chart, and what we can see here, divergence, divergence again. Now here, this is actually gold, so it's $10 a tick. See where there were 5 ticks. Now, as a tip for you, please write this down. The further away your entry is from your major EMAs, the better. You want space, you want room to move. For an example, on our gold EMA, we get a very high percentage bounce. So I have a saying, follow the gold, follow the gold. Yes, I know it might be yellow, but I call it the gold because this leads to the gold. Okay, if you follow this. So I've got divergence here. It comes down, it bounces off the gold, and this is what we call our bounce, our 34B up, and we get another divergence trade, and it comes off very nicely again. Now the further along, or the more divergence trades you have in a trend, the more likely you are to have a much deeper pullback. Now please write this down, and some of you always want to know, where are the pivots, where are the floor pivots? You can't see them here, but you will in a moment. And actually you can see it over here on my anchor chart. You can see one of the floor pivots here. We want to know. Now why do we want to know? Because if you have, and here we had an entry just here, if your floor pivot is just above your entry, you'll find time and time again your divergence trades will fail. The market will rally, then bounce off the pivot, then falls. So you always want to know where your pivots are. Now if you get a good strong divergence trade well away from a pivot, you know that you're probably going to get a bounce and then a trend continuation. And I've just got here just one little tip. I sent a member asked me this week on how I draw channels, and very quickly, because one of the big challenges we have traders is becoming fatigued and also becoming bored. So what I recommend for all members to do, you and all traders do, you actively get involved in drawing trend lines. So if I say draw a trend line from there to there, and let's just say we've only got this price action, okay, so we're on the far right hand side, this is all we've got. Let me just show you what I would do. So I would draw a trend line as long as I'm touching that point there to there. I then want to have what I call a parallel line. I then drag that parallel line so I touch my closest point here furthest away, which is there. What I then do is extend both to the right. Okay, so we can see we had a slight overshoot. I would then extend that one to the right. Okay, let me just extend that to the right for you. Okay, you can see we almost touched it. We'd slight overshoot, a bounce. That is my channel, and some are a lot wider. When they're narrower, I prefer to have a much wider channel, because this tells me here good chance I'm going to get a bounce, but I may bounce off here and then continue. Okay, now the other question before we move on and continue to talk about divergence was, what do I mean by micro trend lines? Now a micro trend line is a much smaller trend line. Now members, you know I love using fractal points. There's one here and there's one here, so you'll see me draw a trend line from there to there. Now what if you only get here? Well, this is our classic T25. I'd still draw a little trend line. These are micro trend lines. Okay, these are much longer trend lines, and I've got my micros on the way through, so hopefully that explains that. Now let's continue talking about our divergence trade. So what we can see here, and by the way, this is the Globex session. It's 2:29 in the afternoon in my part of the world. It is 23:24 US time, so we're getting close to midnight, and so we're in the Globex hour, so it's much slower market. So we can see here we had a nice divergence trade, good for 7 ticks here, bounced, continued, and we can see here we've got divergence again. Now we've now come up and we've hit and touched the floor pivot. Okay, we can see that there. Now what I meant earlier was, you've got to be careful here that if you have a shallow, now there wasn't divergence here, but to say if there was, you can see we come down, we bounced, and we continued. When you sometimes or quite often take a poor divergence trade, what actually happens is it'll come down, bounce, and by the time you go to stop and reverse, the move's over. So become very good and stick with your trend continuation trades, okay, until you're consistently profitable. But what I mentioned earlier, you want to be very wary of taking, for example, this trade here. When you can see you've got divergence here, you wouldn't really want to enter here because it went against you, because you've got strong divergence. So you want to learn to recognize these divergence trades, to be wary of a trend continuation straight after until you get a good decent pullback. Now we've got some added rules. You can see the white paint bar there. That's what we call the super scalper. So it's giving me an entry here, here, and here. So let's now go and have a look at another market. So what we're looking at here, traders, is this is the ES. Okay, once again, Renko 0.5, so two tick candles, or bricks if you really want to be technical on it. Now this is a typical V trade. Some people would call this a spike or a T89. We can see where prices rallied up. Now look at the angulation. Now at this stage we do not have divergence. All right, now this is rolling over slightly, but it's not true to divergence. Okay, it's not, but it's a V trade. All right, ran up and you can see then it comes back down. That's great. Now over here then we end up getting a double top. Now let me pull this up because I just want to show you this. This is very important. Okay, let me just come on, let's do this. Okay, Just one moment, I've got to get this back. Okay, here we go. Once again, my video is always real, raw, and unedited traders. So if there was over any fluff up, you'll have to forgive me. Okay, so what we end up with is this is what I call a big picture double top. Now on the anchor chart, you can see here that it's a lot more prominent, a lot more obvious. Now just remember, a double top, I'm happy if it's within 2 or 3 ticks. Okay, I then actually jumped in and shorted this one. This is last night. I was come upstairs, I saw this great, I actually got in this, I should have been in over here. I actually got in and just scalped this for 5 ticks on the ears, 5 contracts shorted for plus 5 ticks. This is a great double top. It was also what we call a 2D. I had double top on both markets. Now it come back, it actually could have delivered a lot more. As you can see there, it had a nice rally, but double tops are great. Okay, so when you look for double tops and double bottoms when you have divergence, and I'm going to show you a few more of these in a moment because it's very important. See, we come down, we then had a bounce, we rallied up, I then shorted. I was in very late. If I had been buying a computer, we would have been in this over here. Now always be wary when you take a divergence trade of a bounce off the gold, off your major EMAs. So just be ready to either pull your stops in or to take your profits. Okay, look at your anchor chart. How far away are the majors on your anchor chart, because they can be at times a better target than your entry chart. Now I'm going to show you another classic double bottom. So we can see here we come down for a V trade, nice little we had a slight overshoot here. We then if we look over here, we rallied up, we had a bounce off our EMAs, come down, we formed a perfect double bottom. And what else did I have at this double bottom? I had divergence. Okay, so I had a classic 200 sorry, I had a classic T7 divergence trade. Now this is where it comes down to experience, because these are beautiful trades. The thing is though, is to be patient. All right, I've got a great, and this is effectively, members, a T10. Even though it's a double bottom, you could still classify this as a T10 as well. Now just while we're on here, I just thought I'd mark this up and just point this out. This was yesterday at the high of the day, and you can see we had a nice V trade. Now a V trade is, there actually was some divergence. Okay, I actually had some divergence there, and I look at my anchor chart, I had divergence, so that was tradable. We then had a couple of trend continuations, and this actually was an ascending triangle. You can see my trend line off the fractal points. So notice I've got a nice uptrend, but then notice here I've got a horizontal, this is a classic ascending triangle. Now you've got to believe in these. Now natural fact, the market had rallied up, and what you'll generally find is you'll punch through the highs by at least 2 or 3 ticks. You get to know these patterns. This was the high of the Globex session, so I actually only had a 3 tick target. Now I could have got 5 ticks on it, but I jumped out right at the, and if I remember correctly, that was the exact day's high. So I actually had a target of 5 ticks, which was 2 ticks above the high. I decided to front run. There were a heap of orders. We could see on the dome depth of market there were a ton of orders 1 tick above the high of the day, so I decided to get out with 3 ticks. It was a nice, very high probability trade. Now not that was divergence, but I just wanted to point that out. Now you did actually have a double top here, see, here to here, and you had divergence, but notice how close to the major EMAs we were. Notice here there's a nice gap and a nice bounce possibility. Here there was no great rundown at that stage. Something I really recommend, if you're best of the best, usually it's nice to see, as I mentioned earlier, a good gap between there and there in your major EMAs. Still on the same market, still on the ES. Later on in the evening there was a perfect once again a nice V trade. Okay, I noticed the market, and some people once again call this a spike down. The market spiked down, rallied up slightly, come down, formed a perfect double bottom. So what I would say to you as a new trader, until you're consistently profitable, make sure you have divergence on your MACD, your RSI, your CCI, whatever oscillator you may be using. Now here's one of the arguments I hear, but I'm a pure price action trader. Well, that's fantastic, and yes, you will get in quite often one or two candles earlier before you have an indicator. However, you've probably you've probably heard that the early bird always catches the worm, but it's the second mouse that gets the cheese. Now for those of you that may have gone over your head, what it means is it's the first mouse that runs in, gets the cheese, and the mouse trap gets them. It's the second one that comes in and manages to nibble away the cheese after the trap's gone off. Likewise, in a case like this is the second mouse. Okay, yes, you've had to wait longer, but what we've ended up with is a beautiful double bottom with divergence. It can be safer. Now if you're consistently profitable, and you can see we've got trend trades firing off left, right, and center here. Okay, look at our bounces here, and if you're using the trigger line 8, you're just getting these beautiful runs, so you're cashing the money. You can afford to perhaps take some higher risks, but just be aware of that. Now here's another little divergence trade I took. Now with this one I scalped just 5 contracts for 5 ticks. Now what made this good as a divergence trade? Now we can see here we had a divergence trade here, nice rally up. Now just be aware, traders, where you have to be extremely suspicious of a divergence trade is when you see price in a tight channel. Okay, now this is not, you've got slight angulation, okay, but if you're not sure, you actually had divergence here. I always wait for my super scalper to plot, okay, which was there, but this is almost a channel. Now if I get price action channeling in a narrow trading range, I will always wait, or should always wait, sometimes I do forget if I'm distracted, for a double top, which is this one here. So I got in and scalped. Yes, I know I could have got 10 ticks out of this move if I'd have stayed in it, etc. And he was, yes, I know he was a T10, a nice secondary entry was right there. But this also was, if I remember correctly, this was about 9 p.m. my time, so I'm in and out downstairs, back up to the office, in and out with the family. So I jumped in, saw this lovely little double top here. After a channel, this dramatically improves the probability. So as you can see, traders, it's not difficult to make money from divergence trading, but what you've got to watch is channels. What you've got to watch is not being too close to the EMAs. Yes, this was very close to the EMAs, but I've been off a channel. I had a nice little double top. So for me, and there were a couple of other things that members you'll recognize here that made the trade qualify. Now I just want to show you a losing trade, then a winning trade in a moment, but very quickly, here is another classic double bottom. Price actions come down, we've bounced off the 200, which is very common. Okay, this is a real danger area. You can see price action come up, shot through the pivot, come down. We've got confluence of our EMAs, come down. You could have taken that short. Your stop, by the way, should be, I would recommend, 1 tick below here, 1 tick above there. If you had have taken this for a short, had have gone long here, so you would have been mighty fine. But you see, these are always danger areas where you see the EMAs coming together like this. But what we had was this. So let me just show you. We then got a nice double bottom with divergence. Thank you very much for a beautiful rally up. Now I know I keep chopping and changing up because I'm going to show you one more trade, actually 2 more trades, then we'll wrap this video up. Okay, so these are a bit messy actually, and I've actually got I come up to place one of those that ES trade I had before, saw the NQ, and I jumped on the NQ, and I actually got stopped on this trade. Actually, these markers have moved. I've had the computer going 24 hours. Just remember, traders, to reboot your computer every 12 hours. That's what I do. um, um, run the virus, do a number of things. Anyway, I won't go into that right now, but I put down, oops, it was a divergence trade. And this is what I mean. If you wanted to wait for the best of the best, I got stopped on this trade, but then I jumped in after this formed a beautiful double top. Because why did I take this as a divergence trade? It's almost a channel. Okay, this wasn't a great one, but I'd had an extended move. I'd really had a couple of potential opportunities. I should have actually shorted up here. Now, this is the NQ, by the way. I should have shorted here. I got in late. All right, I then got stopped on that trade. It formed a beautiful double top, so I shorted again, and I picked up, let me just tell you, let me just go to the trading dome. 12 ticks it was. So I picked up 12 ticks on this move here, which is $60. So I lost, that was $60, picked up $60 on that double top. So just in closing, traders, we can see here, like we had this is on the NQ, nice little double top here. This is 8:30 in the morning, had a nice V trade here. You had a V trade there, trend continuation. You had a little double bottom here. Look, every market has its own personality. The NQ is totally different to the ES. The YM is different to the NQ. Gold is total different animal. Likewise, you get to the Forex market. You've got particularly very fast moving markets during the prime times of, say, the London Open, the New York Open. Same when you get to the stocks in watching for your divergence trades, and with any of the setups that I teach. So what's very important is that you apply what I teach and you gain screen time. You master the art of trading by spending the time, and this is where a lot of traders are just not willing to put the time in. You need to go into the simulator, and just remember, he who bleeds more, he who bleeds more in let me say it again, he who sweats more in practice bleeds less in war. And it's true. That is, the more work you do before you go live, it's very important. You need to treat this as a 90 to 180 day internship. Traders, mastering the art of trading is not rocket science, but what you've got to do is invest the time. If you're, say, in the US, where probably 90% of my members are, you get home at 6 p.m. the Globex markets open. You've got still some great action on gold, CL, some of the currency futures. You'll still get some moves. You've got the ES, the NQ. You just have to drop the time frames down. Now, if you're trading very quickly, if you say trading normally the ES and you're using a 550 tick chart, you might want to drop down to maybe an 89 volume or a 144 tick during the Globex session. That's if you're not trading Renko. So just lower the time frames down. And and just one more thing. No, I'll actually finish it here. We're just looking at here. We're 33 minutes in. So traders, if you're not a member, visit my website to gain further information. 197 is everything. As you probably gathered, this is the most comprehensive program in the world. Truly is. But learn and master the art of divergence trading, traders. If you're a trend trader, you'll recognize when to stay out. If once you're consistently profitable trend trading, it will dramatically increase your bottom line, taking the golden, that is the great V trades, the great divergence trades. Thank you, traders. I'll see you on the next video.